Okay, we are back, everyone. How are you doing today? For those of you that might be new to the stream, my name is Sean Ryan. I'm one of the co-founders of Predicting Alpha, and we decided to run this morning live stream every single day, 5 days a week, where we basically try to make quantitative trading easy, right? We try to help bridge the gap between everyone else and Wall Street so that you guys can start seeing what it's like to trade with data on your side and get some insight beyond just what the stock chart has to show you. So this is a 30-minute show where I take a look at the top trades for the day, things that I'm taking, things that you might be looking at yourself, and I try to break them down from a data-driven perspective. So with that being said, we're going to hop into this. I just want to say a quick hello to everyone that's here. You know, I'm sure we got Eric and everyone on the live, so welcome, guys. I have a couple cool trades for this morning's stream. I'm going to be looking at a really cool Tesla trade that we have on now. Pretty confident in it. And, Jordan put a lot of research into this trade. Right now, I'm just going to be sharing the general gist of the trade. But just so you guys know, we are going to... I'll take a look at that, Eric. What we're going to do right now is I'm going to give a quick overview of the Tesla trade. But Jordan's going to be coming on tonight's live workshop. And he's going to be sharing all of his in-depth research he did. So you definitely don't want to miss that. It's like the real deal, like what it takes to like find extremely high conviction trades. So looking forward to that. But right now, if you guys want to hop on this trade with us, here's what we are basically seeing. We're taking a look at the longer dated vol for Tesla. Now, we're not talking, 60 days out, 90 days out. We're actually talking over 1 year out, right? We're talking about, extremely far dated vol. And if we look, we can see that the non-event or the implied vol out at 1 year is about 72.69%. Right? And if we look at the realized vol over the last year, it's higher. But there's so much that's happened in this last year. This is, we had the market crash, which drove vol through the roof. And that's really something that kind of skews our data. So what we did was, one step we did was we went back and we looked at the term structure for Tesla before the crash, right? I went back, you can see what I did here, right? I looked at Tesla 2021 02/17, so today's term structure, versus Tesla 2019 November 5th. So about, November 5th, 2 years ago, or a little over a year ago, what did the term structure look like then versus now? And here's what we can see. Right, this is the term structure today in the blue, with the far dated vol being at 72.5%. And down here we have the term structure as it was pre-COVID. And we can see that it's at 44.5%. So a huge, huge difference in implied volatilities. Good morning, Sebastian. How are you doing? So what does this mean? Well, our bet here is that we are going to actually see that level of implied volatility come back down, right? We're saying here the market's forecasting that a year out into the future, we're going to realize a volatility of 72%. That's pretty substantial. That's pretty crazy. So we don't think that's going to happen. Tonight, Eric will go really in depth on what that looks like. But what I want to share with you guys today, right now, is just what the actual trade itself looks like. So what we did was we came over here to the option chain for Tesla, and I'm going to be looking at the January 2023 options. And the trade itself is actually quite straightforward. We're just going to be trading the Delta 50 straddle. The Delta 50 straddle is this, the 1250 straddle, right? This is the Delta neutral straddle. So we're going to sell straddle. Now keep in mind, guys, obviously this is a very capital intensive trade to put on, but it's a good trade. So let's take a look here. Here is the trade right now, right? Tesla is trading at about $785, right? We're trading right around here. And what we are thinking is going to happen is we're not betting on the stock going up or down. We don't really have a view on that. Our view is that this level of implied volatility is going to come down. Maybe not all the way to here, right? We ran a bit of a test. We think it'll drop about 15 or 16 points. And the reason we're trading the further dated options is if we look at our price slices here, look at what our sensitivities are, right? So this one right here at the top, we're looking at the top row in the price slices, this one here. We have no delta, no gamma, a little bit of theta, and a ton of vega, right? We have negative 8,661 vegas, meaning, so let me do this quick. Let's lower this to one lot so you can see what it really looks like. So it looks like this. So we have we have basically no delta, no gamma, very little theta, and a ton of vega exposure. And what you can see is that if we were to drop vega, if we were to drop implied vols here, right, by what we're forecasting it to drop by, this is what happens to our P&L. On this trade, you would be up $15,000. Right, you'd be up $15,000, and you have this huge margin for error in terms of price. Right, we're not too concerned about where the price goes. Tesla rallies to, goes up 50%. We're still hugely in profit if our view on implied vol is correct. And if Tesla drops in value by 50%, we're pretty much in the same boat where we're still safe. So price isn't really our concern in this trade. It's really that level of implied vol, and we can't see it going any higher. It's just like, it's so high already. A lot of research went into this idea. Obviously, you take the trades that you think are right for you, but this is one that we are actually already in huge. So yeah, that's the idea. If you have any questions about that, let me know. I'll be happy to talk about it. Who do we have here right now? We got 12 people. What's going on, guys? What are you guys looking at today? This is the Tesla trade that I'm really excited about. We've got a lot of money on the line for this one. I'm thinking it'll be a very profitable trade. Our timeline for this trade, I guess that's something important, is 1 month. We think it'll take about a month for this to properly play out. But it's a big trade. It's 1 BFT. So Lambos soon. Kua, what's going on, man? Kua, if this goes through, I'm buying Lambos for all of out of options. All right. Kua, I shared it in the group, man. I'm sorry that I didn't personally invite you, but I meant to. Honestly, the message didn't send. I don't know what happened. And Koa, you actually will like this trade. We're gonna talk about it. We're going to talk about it on tonight's live in depth. So Jordan's going to show up. He's going to share all of the research he put into this. It should be really good. And this trade is pretty. Oh, cool. My Lambos, my garage is going to be filled with Lambos well before everyone else is getting it. But I'll make sure everyone else gets one. So let's keep moving here, guys. We're going to talk about some earnings now. If you have more questions about the Tesla trade, we'll tackle them at the end. And Kua, let me know what trades you're looking at, man. I'd be happy to share some info with you. So I'm going to look at three major earnings today. I'm going to be looking at BIDU, going to be looking at FSLY, and TWLO. So let's hop right into it. Now, BIDU obviously has... The thing about BIDU that is tricky is that it's been realizing a lot of volatility recently. Koa, yeah, we would be selling the Delta 50 straddle. So the 1250 straddle, Delta neutral. So BIDU, let's take a look at what's going on with the earnings here. We're seeing an implied move of about 7.24% and an average move of 5.48. So this is looking like a no-brainer sell vol on earnings, except for the fact that two things. Number one, we actually have a positive straddle P&L here, meaning we do see the market understate volatility sometimes. And the second thing that's making me a little skeptical is that Baidu's realizing a lot of volatility right now. Right? It's actually seeing a significant amount of vol. So maybe we can do something a little different. We got that call skew again. You know what that means, guys? You know what that means? It's time for a lottery ticket. Got to throw on a lottery ticket on Baidu, guys. Let's go see what that looks like. Right? So if we come here, we got that call skew. We got that high implied versus realized, implied versus forecast. You can see, we got an 8-point spread there. And if we include this skew, we got like almost a 10-point spread. Pretty wild. Let's go take a look at what this trade will look like. Right, so it's trading at about 310. Let's price out that straddle to start. Oh, definitely not that. I'm looking way too far in the future. We're going to look at the expiry maybe for this week or next week. But since we want to trade the earnings, and this is decently liquid, it's okay. We're going to come here. Let's see what this is. Butterfly. Oh, wait, first. Let's do a straddle, see what the straddle price is. So about $23, $22. Okay. Let's do this. 310. We're going to go up $20 to 320 or 330. And we're going to go up another 10 to 340. Let's see what that looks like. Oh, it's still pretty pricey. Eric, did you figure out some good strikes for this? Here, let's see. Maybe if we lower it a bit. 310. 20. Let's go 16 maybe. Can we do that? No, we can't. Yeah, okay. So this is not bad, right? We have, if we do a one lot, betting on Baidu going up into earnings, we're going to risk about $300 to potentially make $1,500. So it's not bad. It's like it's a 1 to 5 risk reward. This is not a bad trade by any means. And what needs to happen for us to make that maximum gain is the stock needs to go to 329. For us to take our max loss, it needs to go below. Well, let's take a look actually. So we move it forward one day. Right. So this is here. And we have to drop vols. Let's take a look. Vols will drop from 82 to 58. So 20 points. Okay, a lot of the juice is actually in the last couple days of theta here. So what we're going to need to do is probably hold it for that extra day. So if you do put this trade on, you're not going to want to close it out right after earnings. You're going to want to actually hold it probably closer to expiry. That's when you're going to make the most amount of money. But you can see your break even is actually below the current trading price, right? It's actually at about 300. So if you get no move or a small down move or a pretty sizable up move even, even a 10% up move, you'd find yourself in profit on this trade a day after the trade. So it's a pretty good position, to be honest. Right? As long as we don't get the a big move to the downside, we're looking pretty good. But then again, we need to always remember, what does this skew mean? The market is telling us that the most likely move is actually a down move. That is what the market is saying. But if we do get an up move, if we do get a big move, it's more likely that the big move would be to the upside. So I don't know if I would be taking a short vol trade on Baidu, even though the implied move is a lot higher than the average, simply because we're actually seeing a lot of non-event volatility too. Right? And this non-event volatility can really skew what we're seeing. I'm sure some of the hardcore earnings guys like Hutch will still be all over it because in the end of the day, it'll probably be okay. But, that's the one thing. And, I'm a little torn here, actually, guys. I'm a little torn, right? It's realizing 4%. Implied move is 7%. We have 20 points of vol here. You know what? I'd actually say short vol here. I'd actually take it. I'm going to do a little more research after this, but this looks pretty good. I like it. I actually like it a lot. So, all right, we see Q1, usually small moves. Joey, what's going on, my dude? We're talking about earnings. We're talking a little bit about Tesla. Joey, have you looked into BIDU earnings? What do you think about this, man? The one thing that's scaring me is it's realizing a lot of volatility right now. And, you know, that's not fun. Right? We want it to realize low non-event and then have a big implied earnings move. But I'm still thinking it's pretty good. It's not like it's realizing more than the earnings move right now. Right? That's when it would really be troublesome to say. So yeah, that's what we're doing for earnings for BIDU. Let's keep moving along here. Let's talk about TWLO. So TWLO, similar thing, realizing about 3 or 4% today. You know, a little bit below what the market's actually implying it to do. But we can see that we have an implied move here of 8%. It's a lot lower than our average move of 13%. But we need to think about what's driven those average moves. It's been this massive up move here and this massive up move here, as well as earlier on, it used to move a little more. It looks like things have calmed down. It had one surprise here. Besides that surprise, it's been a lot lower. You know what I'm actually thinking here, guys? This is kind of interesting. The last 2 events, it's been no move. Let's take a look at what our loss could potential is here. TWLO. Let's come here. Let's throw on an iron condor. So we're going to go sell iron condor. We're going to go 405, 405. And then we're going to go up $65. So 470 on the call. And then we're going to go down $65. So that's 340 on the put. It's a big trade. It's a big trade, guys. It's another BFT. So if we get a move of about, you know, we have about 7% break evens here. All right, and if we bring it back one day, drop vols by how much? Let's see here. How much do we need to drop the vols by? 79 down to 52, about 26. By the way, guys, that's a pretty cool little feature there, eh? Hey, Kua. All the multi-million-dollar buys on the BIDU chains are already in the money except the 1 mil at 350. Oh, so you want to bet on an up move here? Is that what you're telling me? You think it's going to the moon, eh? All right, let's see what we can do. Is there anything we can do? Market is actually pricing in some upside risk here. Cool, you're not on the BIDU train? Oh, man. You think it's done? Okay. Well, you got to put your money where your mouth is, man. You got to take a bet. The payoff here looks pretty good, right? The risk, you know, a lot of people will think about this as just a risk to reward type of thing. But, you know, there's all this other stuff to consider too. Like, what are the probabilities that we're actually going to be right here? And if we're getting a bad risk to reward, it means we're probably more likely to be right. You know, the market tries to give a fair bet always, right? So if your payoff for you know, a $10 bet is $500, well, you can bet that the market's thinking your odds of being right are pretty damn low. So with this trade here, you know, we're basically saying stock's going to stay between 374 and 435, and we're currently trading at about $405. So if you think BIDU is a good trade, I think it's pretty good. You know, one thing I might consider though, the wings look a little pricey here, right? If I were to just price the straddle, right, you're paying about $3 for those wings, right? And that means your break evens come in by $3 on each side. That's a lot. Cool. That's a cool. We can still structure out a bullish bet here, man. You don't need to think this thing's going to go to the moon to get a little bit of leverage. Let's take a look. Let's see what we can do. Have I been calling it BIDU? Oh my God, I'm so stupid. Guys, I haven't had my morning coffee, my bad. But TWLO here. We can structure out a bullish bet still. Where is it? Okay, what do you think about this? Let's see. Come on, where is the juice here? 45 cents. Maybe. Yeah, this one right here looks pretty good. Check this out, guys. Bullish bet on TWLO. And it's actually like not needing you to go very far out of the money. It's a huge risk to reward, pretty close to the money. Right? So if this is actually if you're bullish, or even if you're not, this is a pretty good trade. Like, if the stock goes up, you're gonna make a lot of money, right? You're gonna make a lot of money here. If I drop the implied vols, yeah, okay. So implied vols drop. This is what your payoff is gonna look like tomorrow for TWLO. If the stock goes above 414, you're gonna make bank, and if it goes below 402, you're going to lose money. So for a bullish bet, this is pretty good because you're getting about a 1 to like 7 risk reward, and it's binary, right? It's like either you're right or you're wrong. It's not like when we put on, maybe a straddle, for example, where it's like, okay, if the stock goes here or if the stock goes here or over here, our payoffs are different. It's really just, are you right? Are you wrong? Boom, paid huge, or lose a little. Now, obviously, this means the market thinks that we're not going to get paid here, right? Or our payoff should be about zero. Market thinks it'll land around $400, but market isn't always right, right? Market isn't always right, especially with these types of events. We get that up move, it's going to print huge. Oh, quick update, guys. For the Shopify trade, right? My trade of the day for yesterday, that was about a small loss, maybe a break even. It was looking really good right up until the open. The pre-market was looking fantastic, and then it just dropped an extra couple points right in the morning. Got brutal, gut-wrenching. So that's what I would recommend for TWLO. If I were to take a trade here, I would either just be straight up short vol, or I would be structuring out this particular vertical where we are at the 412.50, 415. You're going to get it for about 33 cents, and your payoff is big if you're right. Next up, we have FSLY. This is going to be the last one that I have on my list to look at today. If you have a trade you want me to break down, I'm more than happy to show you what the data has to say, what my opinion is, how I'd go about structuring out the trade, given what the market's showing me. So, earnings analyzer. Huge implied move here. Now, I know a lot of people are super, super bullish on Fsly. I get it. It's a cool company. It's been on a huge, huge run. All right, look at this. It's actually chopped around for the last few months. But, I know a lot of people who got in real early, super bullish on this thing. But I'm sort of thinking we got to be selling vol here. This level of implied vol is just way, way too high. Besides this one move here, it's a reasonable enough trade. It's the only time we would have gotten burned. And besides that, market's pretty much been overstating what the vols will be here. right? We have a 12.84% implied move. I'll show you guys what this would be structured out like, but once again, I'm thinking we should be selling vol. Also, selling vol in recent times, a lot of people were saying, selling vol on these tech companies, it's a bad idea, blah blah blah. Saying it's a bad idea, but let me show you guys something here. So here's one of our members, our boy Hutch. He's the earnings king. He's the king of earnings. Here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 earnings trades he's taken recently. All of them short vol. All of them winners. And Hutch isn't just posting his winners or anything. But, these are, a huge array of stocks. And it's unbelievable how profitable these were. Like, my mind is actually blown. But it just goes to show you that, just because we had a rough start to the season, it doesn't mean that trading earnings is going to, lose its edge. The reason it's there is, it's just on average, this vol is expensive. And the reason we don't care that the first couple were losers is that they are uncorrelated. Just because Apple had a bad earnings doesn't mean Microsoft is going to have a bad earnings, right? So one event is not predictive of another. So we just apply the same filter to all of these events. And by doing so, we're able to place a lot of little bets uncorrelated with each other and come out winners almost probably 90% of earnings seasons so far. So let's take a look at what we can do for Fsly. This last one here. We are looking at it right now. We're going to say, the vol's got to come down 116 to 72. Jesus. Okay. FSLY. Let's structure this out. I'm thinking a lot of people are going to want to have wings here. We got to see what we're paying for them though, right? Wings aren't free. Unfortunately, the wings are not free. So we got to know what we're paying, right? The straddle would be going for $12.77. And if we do the iron condor, it's going to cost us, let's see, the iron condor, we go 20. We're not going to be able to do that strike. Okay, we're going to do the 95. We're going to sell an iron condor. We're going to go $25 up. So 95, 95, 120. And down here, we're going to go to 70. So yeah, we're paying about, let's see, we're paying about $1 for the wings. It's actually not too bad, right? It's not too bad. I think it's worth picking them up. Let's bring this down to a one lot, see what we're really working with here. So max payoff, about $1,200, max risk about $1,300. Our break evens here after the vols drop. Let's do that quickly. All right. So what I'm doing right now is you put on the trade and then we have an idea of how things are going to change, right? So one of the cool things you get with the predicting alpha terminal is we extract the event and non-event vol from each other. So what you can see here is this is what the term structure looks like. So if you go to your brokerage right now and you open up the term structure for FSLY, it's going to look something like this. But the reason this is so high is because we have earnings, right? It makes sense that the near dated options are implying a ton of volatility and then that volatility melts away as we move further out in time. But what if the event wasn't there? What would this near dated option be implying? And that you get here in this blue line. This is the non-event vol. What you can see is the non-event vol is all the way down here. So 116 to 68. So that's like, let's call it 30, 45, 47 points of vol. So let's drop this by 47 points. See what the trade looks like. So this is what the position will look like in the morning. You will fall somewhere along this purple line, right? And that's assuming you wait for event vol to melt off, all that good stuff. So you'll either be up $400, or, if you got a, let's say a 20% move, you'd be down about $700, right? So you're getting a little bit less than a 1-to-1 risk reward, but it's not always about risk reward. Always remember that, guys. A lot of people, they go just hunting for the risk reward trades. We like to do that sometimes too, but I call them lottery tickets, right? When you want that high risk to reward, because it's about expected value, right? It's like, what am I supposed to make placing these trades? And trades like this are supposed to make money in the long run, right? We know why as well. We are providing this liquidity to a market, right? We're providing insurance to people. If there was no premium for us, there would be no business. Like, imagine if an insurance company collected $1 million a year in premium and had to pay out $2 million a year in premium. Well, there wouldn't be an insurance company for very long, and that industry would change. And that's what we see here, right? We go through periods where we don't get compensated enough, but then we go through a lot of periods where we're compensated very handsomely for running earnings very systematically, right? And that would be the main 3 earnings that I wanted to look at today, right? BIDU, TWLO, FSLY. That's really it. That's the 3 trades, plus the Tesla trade. Kuo, were you here for the Tesla trade if you're still sticking around? Because that Tesla trade is super, super juicy. Once again, I'll just show you quickly, guys. We're looking at Tesla vols here. The 252-day implied vol is about 72%. If we come here to the term structure analysis, if we compare the implied vol, so if we compare the implied vol for Tesla today, term structure, that's this blue line here, to what it was November 2019, you can see that the implied vol level has gone up like crazy. And it makes sense why, in the last year we saw Corona, we had all the craziness with that. We had the biggest bull run in history. Tesla went on an absolute tear. But if we look at Tesla pre-COVID versus Tesla now and make some small adjustments for, the company being different now, we still think that vols are going to drop about 16 points, right? Think about this. The market's implying 72% implied volatility for the next 252 days, which, like, to give you an idea, it's like saying Tesla's going to move 4% a day for the next year. It's just too high, in my opinion, right? And that's like a really rough and quick and dirty way to say it, like 4% a day. But it's sort of like what the market's saying here. And what we think is going to happen, what our bet is, it's not that Tesla's going to move less than 4% a day. It's actually that the market is being irrational about saying that, right? The market's saying it's going to move at 4% a day, but down the road, the market's going to say, you know what? It's not going to move at 4% a day. It's going to move at 3% a day. Right? And that's our bet. And a lot of research has gone into it. So my business partner, Jordan, scaled in yesterday, put on some pretty good size in it. And of course, this is Tesla we're talking about. So it is going to cost you a lot to put this trade on, right? The capital requirement to do this, even if you did a half lot, is probably like $40,000, $50,000. But the payoff is pretty dope. So I'll show you guys what this trade should look like. Right. Oh, oops. What the fuck did I just do? What did I do here? Order entry. There we go. Okay. So let's come back over here. Let's go to Tesla. So here's how I structured it out. I want sensitivity to Vega because what I think is going to happen is the level of implied volatility is going to decrease. I don't want direction. I don't want any gamma. Don't really care for theta. My bet is that the market will change its view. So what am I going to do? I'm not going to trade the March 2021, right? Let's see what happens if I did this. All right, we'll come down here. We'll compare 2 positions. All right, I want to be trading delta neutral, so let's do the delta 50 here. All right, we'll see this. Say we'll sell this straddle. Hold up. Having a little lag here. Man, this computer. Let's give it a second, guys. We can get rid of these. So this is what the first trade we'll analyze is, right? We're gonna compare two positions so that it's really clear why I picked the one that I did. Right, we're gonna compare the March 19th of this year. And we're gonna compare it to the Jan 2023 straddle, delta 50, right? So delta neutral, which is all the way up here at 1225 now. Let's see. Straddle. I know, right, Eric? Oh my God, this computer sucks. But it's okay. It's my computer. I love it. Okay, it's been with me through thick and thin. A lot of money was made. A lot of money was lost on this computer. Okay. So first trade we're looking at here is the March 2021. And what we think is going to happen, right? Our bet is that vols are going to come down 16 points. So let's say we move forward in the future a little bit. We think this trade will take about a month. So let's say we move it out to like, you know, oh no, okay, that won't show it though. Okay, I'm going to actually change this. We're not going to go March. We're going to go July. July 2021. Let's see here. Let's move it forward. All right, so we're about a month ahead now. Wait, what the heck's going on here? Oh, I need to do this. Okay, there. There we go. Perfect. Right, so we're now in March. We're looking at a July of this year expiry. And what we're going to do now is we're going to drop vol by 16 points and see what happens to this position. And we'll change this to a one lot. Okay, so this is what it looks like on March 18th. We drop vols by 16 points, and our position on a one lot would be up about $8,000. Okay, pretty good. Not bad, right? Well, let's see what happens if we do this. Right, we can see here our Vega sensitivity is negative 355. Right, our exposure to Vega is negative 355. If we go further out in time, we notice something right away. Our Vega exposure is negative 800. We have a lot more Vega sensitivity going on here. So if we were to come here and do the same thing, right? Position looks like this before we drop the vols. Then we come here, drop vol. And even if the stock hasn't moved, we now make $14,000. Right? We go from making 8,000 to 14,000 with the exact same view. Now, obviously, this required putting up a little more capital, or a lot more capital, but the payoff is better. Right? The payoff is a lot better. Our sensitivity to Vega is a lot higher, meaning that when and if and when we get that implied vol drop, we're going to get compensated a lot more for it. And the way to think about it is just that when you're trading something really far out in time, the actual moves of today doesn't matter too much because there's still so much time value left in the option. What really matters with these heavy time value options is the market sentiment, you could call it, right? The market's view of the future, right? If the market goes from thinking we're going to have a really calm, smooth year to the most chaotic year in history, the implied vols are going to go up like crazy. Right? And that value of that longer dated option is really going to be impacted. And this is just simply understanding your Greeks how these options as a product work, and then knowing how to use that to express that view that you have in the market, right? This trade wouldn't make sense if we were trading the near dated stuff. It's that far dated, and obviously the far dated stuff has to be pricing in a lot of vol, which it is in this case, for that to make sense. But that's why we traded as far out as we could, pretty much, to get that sensitivity to a drop in implied vol. So with that being said, guys, I want to thank you all for tuning into this morning's stream. Went a little bit over time, but I love chatting with you guys, so it's not a problem at all. Just remember to drop a like on the video. It's free, and it really helps me out. Mean a lot. And if you think you know anyone who would get a lot of value out of this stream, someone who's really passionate about trading, I would love if you could share it with them and tell them to drop me a message. I would love to help them break down an idea later this week or whenever they get a chance to tune in. So thanks a lot, everyone, and we will see you on tomorrow's stream.